Good morning. Good morning. Good morning. I hope you all can hear me. Um, this is Think About It Thursday with Leslie Barnes. I am the CEO of my household, and I'm going to talk to you about a couple of topics. But first, just want to think about Thursday. What is special that's resonating in your heart today, in your mind? What things do you need to accomplish? Um, How is it going to be a great Thursday for you? So I'll introduce myself. My name is Leslie Barnes. I'm the CEO of my household, and my purpose is to help you uh, look at the structure of your house from more of a business standpoint of things that you need to accomplish or things that you desire to improve on as you navigate managing your household. And with that said, I'm going to get into the topic. So we're in March. You probably got your tax statement for your property tax. And you probably, depending on how your insurance is set up, you probably got your insurance notice. Did you notice any increases in cost? Why did that happen? What can I do about it? Well, we're going to talk about some things that affect that. So, with the rising cost of homeowners insurance and the increasing cost of assessments, our households, we're seeing higher. If you have a mortgage, your is going to increase, not because of the loan or the interest on the loan, but because those two items have increased. So, you want to look at that, assess it. There are some stats that say nationwide insurances are rising. Um, in the past 6 years, it's been 40%. The average cost for homeowners insurance is about $2,800 nationwide. Premiums have increased also in 2023 to 2024 by 10%. And now some states are seeing an increase as high as 27% in 2025. So I live in the district. There's been a lot of improvements in our neighborhoods. People are adding on to homes, making them higher levels to have a more uh, square footage in a smaller print of a property. That is because of the development all over, it's affecting our property taxes. So that's also, I'll talk about that a little later. But why, going back to insurance, why are rates increasing? It, we've had natural disasters, the hurricanes, wildfires, floods, storms. Now on the East Coast, we haven't had hurricanes, but we have had situations, Maryland, DC, where there have been these different storms that have hit and the massive rain. Those things are affecting trees to fall, power lines to fall down. These are things that are reasons why rates can increase. Also, which I didn't think about until I started researching this, it's costing more to replace anything that you've had damage. So material and labor are more expensive to repair your home. So if there's any, because of that natural disaster, now you got to pay more for the wood. You got to pay more for the labor. You got to pay more for any materials. And if you've gone to Home Depot or, well, everything is increasing. So, your groceries are increasing, those materials are increasing. Also, as I was talking about, rising home values. So higher rebuilding costs, higher insurance coverages. And insurance companies just lose money when there's any large catastrophe that happens. We're putting money into or paying for in case something happens. So when those large catastrophes hit and people have large numbers of claims to put in, that's a loss on the insurance company. So, actions a homeowner can take and what should it take to lower the cost? Um, you can do a couple of things. carefully review your policy. Our policy came in, so my husband and I we're going to review our policy because we were looking at the cost, and I said, "Wait a minute, what's happening?" Um, Look at coverage limits. Determine what your coverage is. Does your look at your deductible? Again, we've got replacement cost versus actual cash value cost. What does that mean? There may be a when you're looking at what what you have coverage for, is that replacement cost higher, resulting in a higher cost, or is it really reflecting the actual cost? So you want to remove any unnecessary riders. You could have something on that you didn't even think was important, or or it may have been important a year or 2 years ago, and that rider is no longer necessary now. So look at your riders. Then you can always shop around. I have a tendency to stick with the same providers uh, when I'm working on things, but shop around. You can get better rates. There's always information about increased rates in different areas. So it's your money. You're not obligated. You're not tied to that particular insurance vendor. Your job is to manage your budget. So get 2 or 3 quotes. Um, Look at the insurance deductible. If it's 500 and you have a emergency fund savings of 1,500, increase your deductible to 1,500. That can reduce cost. Those things. And also the insurance companies would love for you to bundle or combine your auto, your home, whatever umbrella coverage you need. And those discounts, according to certain statistics, say it can reach 10 to 25% lower costs. But look at it carefully. And then also, what are your home improvement safeties that you might have? Um, did you put in cameras? Do you have a better security system? Have you updated your roof? You've done things for storm resistance for your windows. You've updated your electrical or plumbing. You have to bring those things to the attention of your insurance provider to say, hey, I've done the following. Um, can this is it a way that my coverage can be reduced because I don't have an old roof? I now have a new roof that's, 10 to 20 years, uh, has a lifespan of 10 to 20 years. Can I get a reduction? Also, avoid any small claims. If something happened, a limb fell and from a neighbor's yard, or a limb fell in your yard because of a storm, but it just damaged one part of a fence, it's better for you to go in, get some cost estimates, get that fence repaired, and not put that as a claim on your insurance. Especially if increase your deductible to about 1,500, you're saving yourself cost, and you're not um, creating another claim that would cause increase to your rent. I mean, to your homeowner's insurance. So those things are just a few tips to think about. Um, it's just definitely keeping in mind what you can do for yourself. Now, um, may ha- I want to jump into property tax assessments. So in the district, I'm a resident of the District of Columbia. So our taxes have come out this last month, property tax assessments. We get a notice of our property tax, the cost for the first half of the year, and also a notice of our tax assessment. And on that assessment, it talks about market value and what your property is assessed at. Now, when you are looking at that bill, we did the same thing, just like the insurance. We looked at our tax bill. We said, "What is happening?" Um, We don't realize that we can challenge our property tax assessments. Why are property taxes going up? Home values are increasing. Like I said, in this area, we have a lot of a development in not only single homes, but a development in apartment buildings, development in new um, condos, development of office buildings. So in your neighborhood, there's probably development where people have gone and gotten sent, they've increased the square footage, they've modernized the homes completely, they may have rebuilt the whole house and just left the front on to get a higher value of home to be able to resell. So that is what's happening. So why are those that's a part of why property taxes are rising. Home values are increasing and local governments are properly local government reassess property values periodically. And if they've lost money on in other areas, uh, and this is just mine, this is my thought. It doesn't necessarily mean it's right, but they're trying to make money. They've got to pay for those services. They're, paying for the services that we have, or we are getting access to, and so those things are. Let me just do one thing here. Give me one moment. Um, if they are doing if they are doing so the government, we're paying taxes. Those taxes go to our services. So if the services cost money, more money, labor, whatever the projects are, new buildings, whatever your taxes go to, that is going to affect you. So they're assessing the values. If your values have increased, your property tax is going to increase. So if your value of your home has increased, the value has increased, your property taxes will increase. So, how do you review your property tax assessment? First, check the assessed value versus the market value. What does that mean? If you go to Zillow or any of those sites, you will see, you can look up what properties are selling for in your neighborhood. The market value, well, excuse me, the assessed value is what the jurisdiction calculates as a value of your home. The market value is where you can see how properties are being what the being sold for in your neighborhood. There are two different values, but it gives you an idea of what the percentage of that value that someone is um, that the county or jurisdiction you live in are looking at as an assessment value on your house. It's not the same. They're not the same. The assessment value is normally lower, but that gives you an idea of why those two values are there. So similar homes in your neighborhood are being compared. Look for errors on your tax statement, your property tax statement. Is the square footage correct? Are the do they have incorrect number of bedrooms? Is that the correct lot size? Improvements that do not exist. Now, I want to keep that statement in mind. Improvements that do not exist. You have the right in many jurisdictions to appeal your property tax increase. And I want people to think about that. If you are um, assisting your parents in any way or a relative that's senior and they're at a point because we're all on fixed incomes, but their income is not increasing to the value that our cost of living is increasing. They may need some assistance for you to look at their property tax notice and determine if they can appeal it. Determine if you can appeal your property tax increase. This is critical. Most jurisdictions have a way to file an appeal. There's a review process with the assessment notice. You gather evidence, comparable home prices, appraisals, photos showing the condition and issues in the home that you want to appeal, and you can file appeal before a deadline, and you can attend a hearing. If you're successful, your tax bill can be reduced, not only for that year, but several years going forward. So I want to put this in the context of an example. You have, or your loved one, you're a senior, because I'm always concerned about people are caregivers. They're responsible for getting the taxes paid on whoever they're caring for at home. Doesn't mean they're necessarily living with them, but they're helping them. You're helping them go through life, manage life. Their house or your house is a 3-bedroom bungalow. The square footage is the same. There haven't been any great improvements. It's in great living condition, it's well maintained, but there are no improvements where you have filed a permit, had to get a justification for work to be done in your house through the district. Next door, or 3 doors down, or on the same block, there are 3 properties that have now increased their bungalow to a 3-story, um, I'll say mini mansion, meaning that they've gone up in square footage and they've gone out because of the property lines. They've extended the footprint of their property. Got new kitchen, double A and C, AC units, um, fully modernized, new windows, new everything is has increased. That property is selling for 3 or 4 times the value of the bungalow. That's what can affect your property taxes. And in an appeal, you would say, I have not done any improvements. I still have the same footprint on my property. Uh, I should not be assessed an increased value because I am living in the same house. You can show pictures of not only your property, but those properties on your block or in your neighborhood. And again, go back to the compared homes sales so that you are protecting yourself. You have to file the appeal on time. You have to follow the instructions that are laid out. Go to your any jurisdiction will give you instructions on how to appeal. This is free. This is free. You don't have to pay for it. You just set up a process to do that. And I know people that have gotten their taxes reduced. So don't think it's not something you can reach. Please know it is a reachable um, process. So with that, I just want to kind of give you kind of wrap it up, and I'll talk about just how that's affecting your budget. Protect your household budget. Things are rising. Look at your monthly cash flow, look at your retirement planning, and financially, what can you handle? If you need those things reduced, when you have those things reduced, you are falling into whatever money you've allotted for yourself. So this is why I wanted to provide this conversation so that you can become the CEO of your house or the houses that you are responsible for caregiving on. And you look at your major expenses annually, keep legal documents, get it organized, and plan for any future changes, financial changes that are headed your way. And that's ensuring that your house can operate smoothly in the midst of if there's an emergency. So, as the CEO of your household, you have the authority and the responsibility to review your household like a business leader, review that financial information that is affecting your house. Your insurance policies and your property assessments are two documents every homeowner should review. And small actions that you take today can protect your household and your budget for tomorrow. So you got three things to do: look at your homeowner's insurance, look at your property insurance, and then your budget. And ask yourself, are we paying more? Have we reviewed these costs recently? And do we have our household documents in order? So I want to thank you for listening to this live. Um, I am the CEO of my household. My name is Leslie Bournes, and I am helping families lead their households with intention, structure, and purpose. You can find us on, and I'm part of the group, the Trio Cares, and we talk about different aspects. You can follow us on Facebook. You can follow us on Instagram. We don't use Instagram as much. We have we will be, and there's our Gmail account, and you can also follow some of the lives we do on YouTube. So thank you for joining. I appreciate you. Have a wonderful day. Blessings.